Hello and welcome to another episode of the Market Snapshot series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So today we'll be focusing on the key events that are currently moving the markets. And once we understand them, we also do some technical analysis to try and understand what might be happening and where the markets might be headed. And once we are through, hopefully everyone will get to understand the key events and potentially identify opportunities in the market. So as always, I will be starting with a disclaimer. As we all know, these sessions are not investment advice. They are not a recommendation to trade. So you should always do your own research, do your own due diligence, and practice proper risk management. So once you join in, kindly say hi on the live comment section. And if you have any questions related to the session, feel free to type them in the live comment section. And hopefully, I will be able to respond them to the questions towards the end of the session. So good morning, Edward. Good morning, this guy with a funny name. Let's get things started. So this morning, we had quite a number of things happening. And one of them is the inflation report coming in from the Bank of Japan. So I will be trying to check the economic calendar so that we go through it together. And then once we do that, we try and understand how it has been moving the markets this morning. So at around 2:50 a.m., we had the preliminary industrial production month-over-month data from Japan, which basically showed a big drop in industrial production, which is a negative 7.5% compared to the expected negative 6.7%. So this was worse than expected. And in the previous reading, it was an increase of 1.4%. Then we had retail sales. Retail sales data came in at 2.3%. This was better than forecast, but the same level as the previous month. So fast forward, still for Japan, we had the housing starts data, which came in at negative 7.5% compared to the forecast of negative 7.6 and a previous reading of negative 4%. So this is showing that housing starts is basically slowing down. So there's less and less construction being done or started in Japan, and industrial production is also dropping. Then we got the final data that brought some more volatility in the markets, and this is the core CPI. So core CPI is basically consumer price index without counting the volatile items such as food and energy. So this number came in at 2.6%, slightly higher than the forecast of 2.3%, but the same level as the previous month. And this was the big surprise in the market, with inflation remaining sticky above 2%, currently at 2.6%. There is that expectation that the Bank of Japan may consider hiking interest rates in the near future. So this led to some good volatility in the markets, as we will see. So I'll be trying to share these on the charts to try and see how this impacted the markets. So from the charts, you can see the volatility that we saw with the USD JPY currency pair. So there was a big sharp drop in the US dollar against the Japanese yen as the yen strengthened, following bets that there is now more pressure on the Bank of Japan to consider hiking interest rates, which led to the strengthening of the yen. So even after attempting to make a market recovery, there was a further selling pressure. And after breaking this major trend line that has held over the last 3 weeks, we are seeing this momentum potentially continuing to 2 more levels. So there is a level around 149.516, which was previously holding a support and resistance. And now the price will likely hit this area. And now if the price was able to break against this area, there's a potential that we could be seeing this movement extended further downwards to a price level of around 148.789. So That's the expectation for USD JPY. So now going forward, we'll be expecting more news in the market, and I'll try to go through some of them and understand where the market might be headed next. So you can see there's a strong comments. Hi, Rose Commanded. Hi, Jason. Hi, John. You can see Chep Koech in the house. Hi, Brian. Hi, Owen. Hi, Elkana. Thank you guys for joining. So let's proceed with the presentation. So next part, we'll be looking at the key events to watch in the markets today. And this is basically the core PCE price index in the US. So at around just a moment. So at around 4:30 p.m., this is when we'll be getting the major news for the day. And the first news item will be the GDP month over month for Canada, where we expect that the Canadian economy grew by 0.2% in the month of January. Then we'll be looking at the core PCE price index, which is a measure of inflation in the US, and it's the Fed's favorite gauge, meaning that when the Fed is looking at inflation in the US, they mainly focus on this index because it tends to be more accurate in the US economy. And if we see an increase in inflation, then it could lead to various pressure on the Fed to potentially hold rates higher or even consider rate hikes. But then if inflation is moving further down towards the Fed's target, then in that case, we should be expecting the Fed to consider cutting interest rates. So if you look at the trading economics calendar, and I'm opening this right now, be scrolling real fast. Yeah. So you'll get more details here for the inflation report. So for the PCE price index month over month, the previous increase was 0.2%. We expect a 0.3% increase in the month of February. So the PCE price index year over year was previously reading 2.6%, and the consensus estimate is that this inflation drops to 2.4%. So if there is such a drop or even lower, then there will be more pressure on the Fed to cut interest rates. But then if inflation remains at 2.6% or higher, then that will be quite a problem for the Fed. So this is expected to increase volatility in all US dollar pairs. We'll also be expecting to see increased volatility in gold, in silver, as well as US equity indices. So the simplest and most direct way of taking advantage of this information would be if there's a strong inflation, let's say 2.6% or higher, then in that case, it means that the dollar remains strong. So the best bet would be buying the dollar against other currencies. Whereas if inflation drops 2.4% or lower, then the Fed might be achieving its target. And in that case, we might consider shorting the dollar against other currencies. So that remains the key market moving news for the day. And of course, we have seen the Canadian GDP will also be on focus. Then at the same time, we'll be looking at the continuing jobless claims in the US. This is a weekly data report. So we expect that the number of jobless claims moved to 1874K or 1.874 million in the US. And this is an increase from 1.862 in the previous reading. So an increase in jobless claims means that the job market is softening, and it's something that the Fed is looking to achieve. But then if the number is lower, then it means that the job market is tightening, and as a result, we could be seeing the market reacting to these two. So core PCE price index was at 2.9% in the previous reading. We expect this to slow down to 2.8%. So naturally, there will be 3 data points, but the key focus will be on the core PCE price index. And if there's a sticky inflation, maybe it moves back to 3%. That's worse. But then if it improves, then let's say, drops to 2.8% or below, then that should be negative for the dollar. So that being said, now we can focus on a couple of technical analysis charts. And once we go through that, hopefully we'll be able to identify potential market opportunities. Awesome. So now that we've covered USD JPY, we can also focus on the dollar index. So the dollar index has been bearish, I would say, for the last 2 weeks. And this being the third week, we are seeing a pretty strong bounce along this trend line. So we were in this channel for quite a period, dating back to 18th of December last year, where the dollar index was consistently gaining over time. And once it got to this high of around 104.740, we saw the dollar index changing direction and now moving downwards. So from the 1 hour chart, you can see the consistent day after day weaknesses in the dollar until last week when we had a big drop and then an immediate recovery, showing that investors are ready to bid the dollar higher whenever price goes down. So from then, we have seen attempts to move lower, but then the previous low was higher than the previous one, meaning that now the dollar index is showing some form of strength, or the bearish trend is weakening. Then the market rallied yesterday and formed a new high that we haven't seen in a while. So the last time we saw this high was back in the 20th of February. And that being said, it shows that there is a more bullish momentum for the dollar. So from a technical analysis point of view, it seems likely that the dollar index could be bouncing right from this point here. So a bounce from here would mean that the dollar index rallies to 104.838, and that would be possible, especially if the inflation remained sticky or comes in higher than expected. So in that case, we could be seeing the dollar index being really strong against other currencies, and that would cause some good opportunities. So on the other hand, a weak inflation report would mean that the dollar index basically breaks the trend line and moves further downwards. So that's also a possibility that could be happening today, and we see a big drop in the dollar index. So now that we know that today's momentum is based on that, then it means that this strengthening of the yen could as well be reversed if the inflation report comes in stronger than expected or hotter than expected. So this is also a potential market movement depending on the outcome of the inflation report. So we'll be patient and wait to see what the market does. So a weak inflation report weakens the dollar, and we could be seeing a further drop to this area here. But then a strong inflation report strengthens the dollar and moves the prices towards this area. So Euro USD is showing some signs of sideways momentum. So if you think about it this way, the Euro USD was making a very strong bounce, and that was 2 weeks ago. Then you compare with the price action we are seeing this week, then you can see that there's this area here where we can say that overall the Euro USD has been moving sideways. So the average price direction for this period is just sideways momentum, and perhaps we'll be getting momentum later in the day once the news comes out. So potentially, a rally in the dollar would see the euro break yesterday's low and it potentially move lower. But then a weak dollar would see the euro continue the bullish momentum and perhaps continue all the way up to 1.08939. So pound USD is showing some signs of weakness. So after the strong rally here, you can see it started forming lower highs, then eventually broke the lower trend line, then pulled back, found resistance here. And what we have been seeing is the market attempting to break this area here, the first time and the second time, both times failing. So the outcome of the news might determine the trade direction later in the day. So USD CAD has been pretty strong, especially following the weak oil prices. So now it's attempting to make yet another high, but then it's all dependent on the news later today. So I think the key driver will be the core PCE price index, and it doesn't make sense to be in the market before that. So if you are trading uncorrelated assets to the dollar, maybe that would make sense. But then if you're trading the USD currency pairs, there's a strong likelihood that there's a lot of volatility that will be coming in at 4:30 p.m. and that volatility could catch you either on the right or the wrong side of the market. So if you're prepared for that risk, well and good. But if you're not prepared, then it's easier to wait until the market makes the move. So USD card still in a bullish momentum. Of course, we'll be observing for a potential rally, maybe the market hitting here and then reversing, and that would be as a result of a weaker dollar. So if you see a weaker dollar, then the idea is to trade for a short position towards the lower trend line. So for gold, we saw the market forming this triangle for the past couple of weeks, dating all the way back in November. And then eventually the market made a break towards the lower side. So the break happened here, then the market reversed over the course of 2 weeks. And once it got to the trend line, things have been pretty mixed up. So we haven't had a lot of big moves except on this particular day. So this shows momentum up, down, up, down. And if you are to think of this in the usual terms, I would say it looks more of a diamond formation to me. So a diamond formation would have a market that is forming higher highs and higher lows. Then later on in the cycle, you see the market now going for lower highs and lower highs and higher lows. So as a result, it tends to be either a continuation or a reversal pattern depending on the side of the breakout. So potentially we could be seeing the price of gold breaking outside this pattern today. So that breakout will be dependent on the PCE price index report. So if the dollar strengthens, then the breakout is on the lower side. If the dollar weakens, the breakout is on the upper side. So the only thing we can do as per now is try to identify potential target levels. For instance, we can already see that this previous high was hit 1, 2, and 3 times. So a very strong rally in gold following a weak dollar could potentially get to 2062 price level. So another key area to observe is this low here, which has been acting as support here and on this level here, on this level, on this level, and potentially it could also be happening today. So the price of gold dropping to 2014 is also a real good possibility. So another key thing to think about this is that a diamond is often a consolidation zone. So price hasn't been moving up or down, it's just been moving sideways up until we get something that fuels momentum in the market. And that could potentially happen today. So make sure you are prepared when the outcome of the news happens. So US equity indices, we had projected that there would be a continuation. Unfortunately, this failed yesterday. I expected the market to literally bounce from here and get to the upper trend line. So this unfortunately did not play out and the market went ahead and broke the lower trend line. So now that we have a break, a retest, and now a potential continuation, depending on how this candlestick closes at the top of the hour. If it closes near this low, then that's a confirmation of a break. And for those who are new to trading, you should know that this pattern here is called a flag formation, with a big impulse movement here representing the bullish momentum here, and then the 2 trend lines representing the flag, and then potentially you want to trade the breakout. So the breakout is seemingly happening towards the lower side, but then the candlestick hasn't closed yet. So if it closes near this bottom here, then the idea is now to go for a short selling position, targeting a previous low around this area here. So there is that likelihood that there could be a big sell-off in the Nasdaq towards 17,501. So it's a similar case for US30. So if I start by cleaning this chart, zoom out. Sorry for that. Get back to US30, zoom out, then identify the flag with the flagpole first, big strong momentum upwards. And now for the Dow Jones, it seems like the flag is much weaker. So this is what we are seeing here. A market significantly forming lower lows as well as lower highs, but then the potential for a breakout is still there. So we will be observing to see if the market breaks and continues to move lower, because a break of the lower trend line would potentially push the prices lower and eventually maybe get to 38,423, and that's for a bearish case. So SP 500 is also in a similar flag. So if I zoom out, this is our flagpole here, and then the consolidation has stayed in that channel for like 5 days, and then potentially could be getting a breakout today. And if the price breaks out to the lower side, then the potential for the price dropping back to the psychological 5,000 price level is also very realistic. So oil prices have been in a range, and if you're a fan of trading inside a range, then the easiest is to sell when the price is on the upper band and buy when the price is on the lower band. So today it seems like we are getting a continuation of yesterday's momentum. So after the market moving sideways for a while in early morning trading, what we are seeing is momentum coming in the London session, and potentially we could be seeing the price projecting further downwards to 80.363 price level. So for the Euro 50 cash index, it seems like we have some form of consolidation, but the price is is basically pushing even higher, and we could be seeing this continuing for the better part of the day. So European equity indices seem to be strongly bullish. It's the same thing for the French 40 index. So after trading sideways for the last 3 days, what we are seeing is the market now pushing for a rally towards the upper side. So you can already see this sideways momentum here. And now today market opens, cruises higher. It's retesting the previous high and could potentially break this area and move higher into another yet all-time high. So that's likely to be some good outcome for the day. So USD trading against the Swiss franc, we have been seeing this range continuing for a while, but now the market is insisting more on the lower trend line than the upper trend line, which raises the likelihood of the market breaking that trend line and moving further downwards. So the highs now are getting lower and lower, whereas the lows have remained around this area here, and the market is on the verge of making a breakout. So depending on how the market closes at the top of the hour, there is a likelihood that we could be seeing a breakout towards the lower side and potentially run towards this previous bottom. So this is a key potential idea for the day. So New Zealand USD, big sell-off here. We are yet to hit a bottom, so we could be seeing this continuing, especially with a much stronger dollar. So 0.60495 seems like a likely target for any person who have been benefiting from shorting the New Zealand dollar against the US dollar. So that being said, last item I'll be mentioning today is the strong momentum that we have seen in Bitcoin. It seems to be just moving upwards with a very strong trajectory. So in the last 3 days, we have seen the momentum moving from around 50,974 all the way up to the highest price level we saw yesterday, and that's around $64,000 per Bitcoin, being a 25% rally within just 3 days. So this is making all the headlines, and there's likelihood that there will be more for more trading coming in, and as a result, there's a potential that we continue seeing further upside momentum. So from the daily chart, you can see those are 3 straight days market moving higher. Today being the 4th day, there's a likelihood that this momentum continues. So we could be seeing the price of Bitcoin hitting another all-time high. So the last time Bitcoin was trading at that price level was back in 2021 when we topped at 68,819, and the price is now headed back there. So the real resistance is around $69,000. So there's still more room for upside potential. So that's it for the day. I'll be looking at the questions, if any, try to respond to them as we approach the end of the presentation. Comment on government shutdown in the US. So government shutdown has been a constant worry over the last couple of years. And this usually happens when bills come due for the US government, and the US government cannot basically provide funds to pay these bills, mainly because they have exhausted their borrowing limits. So the US have a borrowing limit that is set by the Senate, and this limit can be suspended, and it can also be pushed higher. So they basically push the ceiling higher, they borrow more and continue spending. But then until this is passed through Congress, then the US government can be shut down. So knowing this and expecting this to happen, normally you will see that there will be more political pressure where the Democrats and the Republicans will be arguing on a bill. And once they negotiate, the Republicans will try to get something out of it so that they support the extension of the credit limit. So it's more likely than not that they will get a last minute deal. And once the deal goes through, then the decision about shutdown is pushed further down the road. So I'm still checking to see if there's any other question I may have missed. What if the price index is higher than expected? So this is a good question. So if the core PCE price index is higher than expected, then you expect a stronger dollar. The Fed will not reasonably cut interest rates when inflation is high. Remember, they've been hiking interest rates to address the inflation problem. So if inflation remains high, then you expect that the Fed will continue holding rates higher or even consider hiking, and that tends to be very strong for the dollar. So in that case, you look for potential opportunities where you buy the dollar against a weaker currency. A good question from Buire. Yes, on Tuesday, we had the 4 p.m. session, markets at a glance. I think that's when the heavy rain started. So basically, in my area, the electricity was knocked out. There was no way out of it. There was no way I could have presented the session. So apologies for that. I think it has also happened to the president twice in the last week. So it's kind of understand the challenges we are going through as a country. So greetings, Kim, Elkana. Do you usually trade news? No, we always trade the price, but whenever there is news and you know that the news will affect the markets, then it's within your interest to understand how that might affect the markets because it increases volatility. And as a trader, without volatility, you can't make money. It's the volatility that creates opportunities for you to make money. If the market was just moving sideways, then there's no opportunities. So yes, news are a very important part of trading. So last question here from Buire. Kwani, was the Kenya shilling gains against the dollar just temporary? Because we are now seeing Kenya shilling losing again. What do you think is the long-term projection of Kenya shilling against the dollar? So we haven't solved the underlying problem, which was the supply of foreign currency in the country. So I think I will leave you with some form of homework here. Just consider where we as a country, Kenya, get our source of dollars. So look at the trends in diaspora remittances, Kenyan exports. Look at the foreign direct investments. Look at the loans we are getting as a country, and then compare that with how much we are using those dollars. So we normally use dollars in various things, mostly on imports. The biggest bill that we have on foreign currency reserves is basically paying our external debt. We also spend a lot of dollars to import oil. We also spend a lot of dollars to import various goods and services that we consume, that is consumer goods. We spend more to buy cars. Those are durable goods. Try and compare both sides of the equation. And if there is an imbalance, then that should provide you with a guide of where the Kenya shilling might be headed next. So a good question, what is the outcome of news when actual data is same as forecast? Is that bullish or bearish for the currency as seen on RBNZ decision yesterday? So it depends on the overall picture. So you want to know what is the overall picture of this data outcome. So if the overall picture is indicative something bullish or bearish, then you take that direction. So an example, there is the CPI forecast for today. So if we happen to see, let's say the core PCE price index coming in at an expected 2.8%, that is still significantly higher than the Fed's target of 2.0%. And that means there is a potential that the Fed will continue holding rates higher for longer. And as a result, you expect the dollar to remain strong. So sometimes it's not comparing the previous with the consensus estimate. It's more about understanding what the data means for the economy. So I expect that the investors will be betting on a stronger dollar if core inflation remains around 2.8, 2.9%, or even higher. So just because the data came out as expected, it doesn't mean that there won't be a reaction in the market. So thank you very much, guys. Thank you for your time, and I hope to see you on the next session. That will be happening today at exactly 8 p.m. So we'll have more discussion after we have the data, and hopefully everyone will have identified some good opportunities for the day. So last question here before I end. Is it likely to anticipate some form of a market correction on BTC before having to provide? I don't know. It's more like a gold rush. Everyone is attempting to get some shares for themselves. So there is a very strong demand from US ETFs, and now the world is joining in this rush to get the last Bitcoin, and as a result, we are seeing a very strong momentum. So I wouldn't be betting on a potential pullback. So make sure to check out the latest episode of the Bullish Banter podcast, and at the same time, set a reminder for the session in the evening at 8 p.m. Thank you, guys. See you then.